Hello and welcome back to this channel. 4 golden trading strategy you can't ignore when you place a trade. In trending market, these 4 golden trading strategy will improve your profit drastically if followed properly, and they are as follow. Number 1, candlestick mat blending buy signal. Number 2, moving average crossover buy signal. Number 3, Bollinger Band 3% buy limit order signal. And finally, number 4, MACD crossover buy signal.
The first strategy I'm going to introduce is candlestick mat blending buy signal. Candlestick mat blending is a very simple and easy method that you can blend 2, 3 or more candles to find the equivalent. This will tell you the location of buy or sell signal. With this extremely easy method, you can forecast the strength, behavior, and direction of the trend with a big probability. This will eliminate memorizing the name of funny and weird pattern information and its complicated instruction. With this method, you can understand the price action and market reversal. How to place a trade using candlestick mat blending. This is the price trend, BB stock, D1 time frame of finance. I installed 2 SMA, namely SMA 30 indicated with blue color as slow moving average and SMA 15 as fast moving average indicated with red color. As you see here, the price is trending nicely downward and it's making lower swing low, lower swing high, lower swing low, lower swing high, and lower swing low. That is the characteristics of strong downtrend or trendy market. Here, when the fast moving average, the SMA 15, crosses the slow moving average, SMA 30, while going upward, it generates a crossover buy signal. So here you can enter the trade and put your stop loss below the crossover. I want to show you here another easy method. You can enter the trade and maximize your profit using candlestick mat blending. So in my next slide, I'm going to highlight this section to show you this technique. How to place a trade using candlestick mat blending. This is the same price trend, and I highlighted this section between these two arrows, which they are 9 candles, and here we are at the bottom of a downtrend. And to blend these 9 candles, it's very easy. We take the open of the first candle, then we take the close of the last candle, and then we take the high and the low of the pattern. And this is the equivalent of these 9 candles, which it is in D10 time frame. And you see it's a bearish with a long lower shadow pin bar. And we know that the buyers, they are in control of the market. So in order to enter the trade, we have to wait for the next candle after this, the last candle that we blend, that is a close that closes above the close price of this candle, of the equivalent. So not this one, but this one, it closes way up the close price of the equivalent. So we enter the trade here and we put our stop loss 1 or 2 ATR below the low of the equivalent. So you see in this technique, first of all, it's very easy. And second, you see that we enter the trade way before the entry price of the two SMA crossover, if you use this technique. So this is much more profitable than this technique, the crossover technique. Now, this is the beauty of trading using or entering the trade using candlestick matte blending. The second strategy is how to place a trade using moving average crossover buy signal. This is the price trend. If RU stock D1 time frame, Yahoo Finance, as you can see, the price is trending nicely upward and making higher swing high, higher swing low, higher swing high, higher swing low, higher swing high, higher swing low, and all the way up. And this is the characteristics of a nice trendy market. I install also two moving average, namely SMA 42 as a fast moving average indicated with the red color, and SMA 100 as a slow moving average indicated with the blue color. Now here the price, the fast moving average crosses the slow moving average here and generating a crossover buy signal. So in order that this crossover be valid, first the price must be above this crossover, which it is, and second, this price trend must always be above the two moving average. So here you can enter the trade. In order to enter the trade, you have to go to one step lower time frame instead of D1. You go to H1 time frame and you find the nice entry. And you put your stop loss 1 or 2 ATR below this crossover buy signal. Now, you can stay in the trade as long as this price be above these two moving average. And on this D1 time frame, when the fast moving average crosses the slow moving average while going downward, at this place, it generates a crossover sell signal. So you can exit the trade right here. You can exit the trade and you put your stop loss 1 or 2 ATR above this crossover. So this is another strategy that you can enter the trade. The third strategy is Bollinger Band 3% buy limit order signal. This is the price trend. In your stock D1 time frame, Yahoo Finance, I installed Bollinger Band with 2.5 standard deviation to accommodate more pullback. And also I installed SMA 200 to check the direction of the trend. And also RSI with 2 days period. So to enter the trade, these conditions must met. The first condition is the trend must be in uptrend direction or the price must be above the 200 SMA, which it is. So the price is trending nicely upward and above the 200 SMA. Number two, the price must cross the lower band. It crossed the lower band and exit outside, like this one, or this bearish candle. It crossed the lower band and close outside. Or this one. It crossed the lower band and close outside the lower band. Number three, place a buy limit order 3% lower than the prior close price before the market opens. What does it mean is this, if you look at this candle, it closed outside, and then the next day before the market open, you place a buy limit order 3% lower than close price of this candle. So let's say the close price is $100. You place a buy limit order at $97, and you wait to see your limit is filled. So you see, if you place at $97 here, you're already in this day, your limit is going to be filled, and the price after that is going to go up. The same thing, your limit here is going to be filled, and the price the next day after is going to go up. Now, number 4, which is very important, to exit the trade or take profit when the RSI crosses the 50 value. This is the 50% line of RSI. Now, here you see after that the price is going up, and look at here, as soon as the price passes this 50% line, you can exit the trade. But when you exit the next day, not the same day, the next day, you wait for the market opens and see what is the behavior of the market. If the market is going up, you don't have to exit. But if the market just going below the close price of the prior candle, then you exit market. For example, let's say this 50% line, it is exactly this candle, and you see the candle opens way above the close price of this candle. So you don't have to really exit the market. Wait for the next day. This day, it opens again above the close price of this candle. You don't have to close. You don't have to exit the market. And the same thing, I would exit here. And you see that you are in overbought area, which is very nice, and you make good money. Here, you see the 50% line here is approximately, you see this 50% line is approximately here, this candle. Now you see the next candle, it opens way up the close price of this candle, so you don't have to really exit the market. And the same situation here. The only place that you can exit is here. And you see this strategy is really beautiful using Bollinger Band. So I recommend that you pay attention a lot while you enter the trade and try this strategy. It is beautiful. The last strategy is MACD crossover buy signal. This is the price trend MUR stock D1 time frame of finance. I installed the SMA 10 as a fast moving average as a best fit for this price trend. And also this is the SMA 10. And also I installed MACD indicator 12.26.9 parameter. Now the price is originally coming downward, coming to the bottom of a downtrend, and it consolidates here, and finally it break the moving average, the dynamic resistant, and finally it heading upward. If you look at the MACD indicator, the price is coming down as it indicated with this bearish histogram bar, and finally start picking up from here. As you see, it consolidate here and it doesn't move that much, and finally it's going down and crossing the orange line while going upward, and it generate a crossover buy signal as it indicates here that it passed the moving average and heading upward. So as long as the price is moving up and these two MACD lines and orange lines, they're apart, that is a good indication that the price is going upward. So you leave it as it is and let the price go up all the way here. And as you see it in price trend 2 as well. And from here, the price is falling down. And you see the price is falling here. And finally, at this point, you have the crossover sell signal. So basically, you can enter the trade here and you will exit the trade here. When you want to enter the trade here, you can go to one step lower time frame. This is D1 time frame. You go to one step lower time frame, H1, and so daily time frame, the hourly time frame, and find the precise location. You enter the trade, and you will exit here. When you enter the trade here, you put your stop loss 1 or 2 ATR below the SMA 10, and when you exit here, you can put your stop loss 1 or 2 ATR above the moving average or above the swing high here. So this is the best, another good strategy that you can use, that you can enter the trade. I hope you enjoyed this video and wish all of you a good luck. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.